Well, good morning, everyone. Um, my name is Jesse Mark. I am the director here for the Minority Business Assistance Center here in Columbus. Just want to thank everybody for their time today. We're going to be talking about business credit today with our partners from Fifth Third Bank. Again, a couple of housekeeping items here for us. Please turn your cameras off and have your line muted until the end of the presentation. We'll open up for some Q&A. Again, so happy to be here. We truly appreciate the opportunity to partner with Fifth Third Bank, a great organization, a great partnership again. And without further ado, I will go ahead and kick it over to Ms. Loretta Humphreys, representing Fifth Third Bank. Loretta, good morning.
Yes. Good morning, everyone. My name is Loretta Humphrey Cruz. I am from Fifth Third Bank in the Community and Economic Development Department. And we really appreciate the opportunity to share some time with Columbus Urban League and with you, the participants, to help you learn a little bit about how businesses use credit. We've been partnering with the Columbus Urban League for a number of years, and they are one of the best partners that we've had in the Columbus area and servicing the community and the small businesses and entrepreneurs in the area as well. And I am not going to take up a lot of time. I am going to pass the presentation over to Ms. Paige Tripp and Ms. Tina Bird, and they are going to walk you through the details of how businesses use credit. And if you have any questions at the end of the presentation, feel free to reach out to any one of us. We are happy to answer any questions. Tina and Paige are actually bankers, so you probably want to direct your questions directly to them. Any questions regarding Fifth Third and what we do in the community, feel free to reach out to me. I will put my contact information in the chat. So I am going to now pass the presentation over to Ms. Bird and Ms. Tripp. Thank you so much.
Thank you very much, Loretta. My name is Paige. I am a financial center manager over off Cleveland Avenue on 161. Been doing banking for quite a while. Have a really big passion with my business customers, as well as in my personal life as well. Most of my family are out business owners, so it holds a special place in my heart. So I'm excited to be able to present with you guys. I'm not sure if Tina's on yet. Tina, are you there?
Yes, I am here.
Awesome. If you just want to introduce yourself as well.
Absolutely. So I am Tina Bird. I am the financial center manager here in Upper Arlington. I have been with Fifth Third for 10 years, and I definitely have a passion for helping educate in any type of way. And business credit is going to be a fun and exciting topic. I'm excited to help you guys learn more about this. I agree with Paige. It is our passion to help customers understand their business and understand how business credit works. So we've been doing this for a while, and there are going to be questions that we don't know. So I'm excited for you guys to ask questions and participate throughout the event. It makes it a lot more engaging. So I will turn it back over to you, Paige.
Awesome. Thanks, Tina. All right. So today we're going to kind of go over how businesses use credit. And we'll go, like she was saying, we're going to do lots of questions and lots of different activities. So if you guys would participate, we'd really appreciate that. It makes the time a little bit more fun as we're going through it together. So first, I also want to introduce Fifth Third. We, as a company, work really closely with our small businesses here. So if you do have any questions in particular, feel free to ask me or Tina at the end, or put it in the chat box, and one of us will answer when the other isn't presenting. So let me ask you guys, what are some challenges you face as small business owners or as an entrepreneur that is trying to start their business? And if you're muted, you'll just have to unmute, or if you just want to put it in the chat box, that works as well. Or if that maybe doesn't pertain to you, what are you hoping to kind of gain from this workshop that we have going on today?
Hi, name is Kelly Clark. I'm looking to understand how business credit works, how it looks on my taxes, and what are the benefits of utilizing business credit.
Wonderful. Thank you so much, Kelly, for bringing that up. That is definitely some stuff we'll go over today. We'll touch on a little bit of it. And if you do have more in-depth questions, feel free to let us know, okay? Anybody else have anything that they're trying to gain from this workshop today? All right. Well, thank you so much for sharing, Kelly. We'll go into slide number 2, Loretta. We are going to go over the understanding of credit, how businesses use credit, and the different forms of credit that businesses can use here. So today, we really want to go over first, defining credit, what that means for you as a business, and also kind of how it affects you in the personal side as well. 2, understanding the different ways small businesses use credit, so different types of forms and how that can affect you and why we use the different forms that we do. Another thing we'll go over is explaining why businesses use credit. So every different industry has different ways. So we'll kind of touch on a couple different ways that it may benefit you. And we'll also go over different forms of the credit that businesses can use. So those are going to be our goals today. You know, business owners, they come from a variety of industries, and their businesses are at varying stages, as you guys might be. Some of you may have been entrepreneurs for quite a while, and some of you might just be starting out. And all those stages are fine for us, and we're happy to help you whatever part of journey that you are on. We also want to go over, no matter how or where you're at, how we can help you grow and expand by using this business credit. Understanding how you can maximize your credit to maximize the potential of your business is an important step in growing a small business. So we're going to get started and learn how businesses use credit and the different forms of credit available to you. So another question is, do any of you currently use business credit? And if not, that is totally fine as well, and that's a big goal of our workshop today. So some people may start their businesses out by maybe getting a personal loan from a friend or family member, or a personal loan from the bank. Different lines of credits or a business credit card, depending on what stage you're at in your business. Starting out with those is great. So now we're going to really focus on how can we, as a business, now that you're kind of established or getting established, how we can utilize those forms. So what is credit? We're going to kind of go over defining what credit is. We're going to go ahead and move to slide number 3, Ms. Loretta. What is credit? Now, it sounds like some of you may be familiar with credit, and it's kind of similar when it comes to personal and business. You do have credit cards, you do have loans, just like on the personal side. And I just want to make sure that we all are on the same page of what credit is in that definition. So as you see on the slide, it's a contract or agreement between a borrower and a lender in which the lender provides something of value to the borrower and the borrower agrees to repay the lender with interest. What that means more in plain terms is we, as a bank or lender, loan you money or give you a line of credit to allow you to use it as you need, with the form or contract that you will repay us back, and we're going to charge you a little bit of interest or fees associated with that to let you borrow that money. Credit can also refer to borrowing capacity or how much money a borrower can borrow. So this will vary based on independent circumstances and different situations, but that is something we'll also go in a little bit for. So let's go ahead and start looking at some reasons why businesses use credit. So what are some reasons that you guys might be looking at using credit?
To make a big purchase.
A big purchase? Awesome. What kind of purchase are you kind of looking at making?
This is Tina. I was just throwing out some different ideas out there.
Oh, sorry, Tina.
I know a lot of my customers, they may look at purchasing a piece of property or a building or something along those lines, and they will seek credit from us for that.
Absolutely. Different properties, different equipment. I recently had a customer, he owns a landscaping business and was looking to expand. So he wanted to purchase another truck. So we utilized our business loans to try to help him get that truck so he was able to expand. So lots of different reasons that your business might need credit. Other things, maybe you have invoicing needs, meaning, somebody is paying you, but they don't pay you till the end of the month. So you still have to purchase product or wherever your business buys in the meantime. So you might need a different kind of credit to be able to get through the month so you could pay your vendors, but also keep the cash coming in and out of the business. So lots of different reasons that businesses may use credit.
Hey Paige, this is Jesse here. I have a good one. My business is growing and I need to hire some more employees.
That sounds like a great one. Yes, it's growing businesses, hiring employees. That can be expensive too. So definitely that is a great one because as your business grows, it gets harder and harder, I'm sure, to do it all on your own, as I've seen. My father, actually, when we were growing up, he was a one-man show, and he had the same situation where he needed to have more employees because he was just doing too much. It was getting a little overwhelming, doing the accounting and doing everything by himself, doing the actual deliveries. So definitely hiring people is a big deal in businesses. So we're going to go ahead and does anyone have any questions on what credit is? And if you do, please put it in the chat box and I'll be free to go over anything more in depth. All right, so we'll go ahead and move to slide 4 then. So this is going to go over credit needs. As we are kind of talking about and we kind of discussed a little bit, why are businesses using credit? So depending on your stage, it may be starting up. Without seed funding, businesses may never be able to get off the ground. So if you don't have that initial push to get whatever you're needing, materials, hiring employees, it can be really hard to even get it off the ground and going. Another reason would be provide working capital and cash flow. Without cash flow, businesses may run out of money and collapse. So what that means is if there's not money coming in and coming out and you're not able to pay your vendors or pay your employees, but also make sure that you're making money, it can cause the business to be really have a lot of challenges when it comes to making their bills on time. Another reason would be growing a business. So maybe you want to purchase a new property to expand, another truck to expand it, so you can have more exciting things to do. Another thing would be to purchase fixed assets. Businesses make large purchases as vehicles, equipment, or real estate. Tying up cash in large purchases can restrict cash flow and cause problems for the business. So if you're putting, a lot of people will look at their balance sheets, and if they have all their cash tied up in any a property or a large equipment, it can make it really difficult to purchase other things that come up or are needed. There's lots of unexpected things that come up in business, and so having that liquidity or having access to that cash is really important for businesses. So other types that we have is there is long-term and short-term loans, depending on what you're needing. So we're going to go do a small activity, and we'll all just kind of work together. I'll kind of talk through it. So how many, for this activity, we'll review each section of the table, and we'll fill out the sections to get a better idea about planning for your future. Don't worry if you don't know the exact values or dollar amounts you'll need. Put down your best estimate, and let's get started. So in this activity, it's going to ask for how your business uses credit. Consider your current credit requirements. What do you need credit for? And do you need it for running operations, purchasing equipment, expanding services, or completing some other task? So just think to yourself as a business owner what you're using that credit for and what you're going to need it for in the future. For how much credit my business would need, work out how much credit you would need. So So what that would be is, what do you need to buy or invest in, and how much does it cost? The next thing that we'll go over is for when I need this credit, plot a timeline for these purchases. How soon do they need the money, and how long can you wait for it? So these are things we ask our businesses a lot, because this can depend on what kind of credit that you'll need. So if it's something that's an immediate purchase, we might need to look at different options opposed to if it's a long-term goal or plan. So that way we can get you into that correct type of loan or line of credit. Does anybody have any questions or want to kind of go over maybe something that they're needing anything for? And if you do, just throw it in the chat box and I'll come back to it if I see it. Now that we kind of discussed credit needs, let's explore different types of credit and how we can help you meet those needs. So we're going to go ahead and go to slide 5. And this will be on page 4 of my credit types in the participant guide if you're following along. There are many types of credit that businesses use. We'll explore each in depth, but first let's identify what are the most common options. So as we were kind of talking about a little bit ago, short-term needs, that could be paying bills or covering travel expenses. This is where lines of credit, secured and unsecured, and business credit cards would come into place. And then long-term needs, such as buying a vehicle, real estate, or equipment. Unsecured term loans, non-real estate secured term loans, and real estate secured term loans. So short-term needs, those could be anything from buying office supplies, or maybe you're traveling, or maybe you want to give your employee a credit card to purchase gas while they're out. These business credit card would be a great option. Lines of credit, this could be for maybe purchasing merchandise, or sometimes you get a better deal if you buy in bulk. You don't have all the cash up front. You can utilize that line of credit to get that. Long-term needs, it's going to be buying that vehicle, real estate. Definitely when it comes to business real estate, it is a bigger purchase, and it can be something that can really benefit your business, but you want to make sure that you have the right loan to be able to achieve those goals. If you're looking for, they're also for real estate. The other thing I wanted to mention is typically with those loans, it does need to be owner occupied. And what that means is the owner, if you're actually in the building, you need to actually be in the building in order to get a real estate business loan. So you can't just purchase a property, rent it out to someone else. You actually do need to be in the building for a lot of our loans, at least we have here at Fifth Third. So now that we've kind of gone over these different types of credit that we have and what they kind of can help the business for, we are going to go through a self-reflection activity. Allow 30 seconds for yourself. Think about the type of credit you may have already and check off the types that you have. Does anyone on the call currently have any business credit, or is this more of an educational call for you guys?
For me, it's educational, but I just opened up my business account and they sent me a business debit card.
Mm-hmm.
So, yeah.
So more education. Is there something that you're looking to kind of expand for yourself?
In the future, I will need to, looking for credit for a car for traveling during the business work hours.
Okay, awesome. What kind of business do you have, if you don't mind me asking?
Yeah, no problem. Providing Zoom and FaceTime calls for those who have disabilities.
That's wonderful. That sounds like a fantastic business. Thank you so much for doing that. Because that is obviously, as you can see, our world is changing, and it sounds like your business is going to keep expanding, definitely in current times. So looking for that loan, and it sounds like you did a great first step, got your business checking account open. So yeah, reflecting on how is my business going to grow and how do I keep going up with that? So business vehicle sounds like a great option. So I'll try to kind of add that in as we go over some more things to help you out to how we can get you to that goal, okay?
Thank you.
You're welcome. Thanks for sharing. I really do appreciate it. All right, so now we're going to transition into going over pros and cons of each of these types of credit. So if you turn to page 5 and 6, lines of credit in the participant guide, we just learned that lines of credit are short-term financial tools. Let's take a deeper look and why it might be useful to take out a line of credit. So Loretta, if you don't mind just going to the next slide for me. If you and your business have good credit history and your business has been profitable for at least 1 to 2 years, you may qualify for short-term financing, such as a line of credit. A line of credit is a revolving loan up to approved limit, which can draw from a borrower's needs, paid back when cash flow allows, then drawn from it again. A borrower pays interest on the loan only when using the funds, although some lines of credit may also require an annual fee. Now, some of you guys might have this in your personal life. This could be something kind of similar to a home equity line of credit or a personal line of credit that you might have. So with lines of credit, you can take money if you need it, but you don't have to, and you don't pay interest until you actually physically use it. So that's the cool thing, but it's there if you need it. So it's kind of an emergency fund. Definitely with businesses, like we we're kind of talking about, there's things that can happen at any time, or you may start expanding or growing at a rapid rate that you didn't even expect to. Having that line of credit there is a great thing to have as an emergency plan. They can also be used for a lot of short-term needs. The most common use of businesses is to manage cash flow, especially because there's often a lag time between when money is spent and when revenue is realized. The lender may require the borrower to provide some sort of collateral to secure a line of credit in case the borrower doesn't pay the loan back according to agreed on terms. Collateral could be equipment or a lien on accounts receivable. So sometimes if you want maybe a more robust line of credit, or you just you're a newer business, the bank may ask for collateral, so a business vehicle, or like I was saying, maybe some cash that you have, or even investments in your business. Some lenders may offer unsecured loans that doesn't require collateral, but these are less common for newer and small businesses. So why would you want to use them? I know I kind of went over, I was kind of talking a lot there, but fund ongoing operations, have working capital and easy access to cash, have cash flow, especially during seasonal fluctuations, acquire inventory, meet short-term goals, and take advantage of trade discounts. So with season fluctuations, maybe you have a business that is a landscaping business where you're really booming in the summer and the fall time, but maybe winter you don't do as much, maybe some snow removal, but you still want to make sure that you're paying all your expenses. This may be a line of credit that you use, and then you pay it off when you get all your money in the summer. And then some just have, like I said, easy access to cash, and then acquiring inventory. Sometimes you get better discounts if you buy in bulk. So those are some really good options on what lines of credit will do. And this is revolving, so if you do use it and you pay it back, you will have access to that. A lot of times with lines of credit, you do need to renew it every 12 months or pay it back every 12 months as well, depending on the lender that you go through. So make sure if you do apply for a line of credit, ask whoever you go through or us at Fifth Third how their line of credit works when you use it yearly. So how would you qualify for a line of credit? Whether you get a line of credit depends on your current cash flow and asset ownership. To qualify for a line of credit, you need to meet some of the following criteria. You typically want to be in business for 1 to 2 years. You want to show positive cash flow, making sure that you're not losing money in the business. Both you and your business have good credit history, and there are sufficient assets for secured lines of credit. So another thing that I would like to mention is if you are applying for business credit, you would typically also need to have good personal credit as well. Because businesses, you will have a credit for your business, but if you apply for anything, they will pull your personal credit a lot of the times as well. So it's really good to have good personal credit as well as good business credit, because they both will matter when getting to applying for loans and different credit. So I know some of you sounds like newer, never used credit before as far as business credit. It's going to be very similar. Interest rates, repayment timelines, and funding timelines. It's going to be really similar to kind of how personal works, but it will be for your business, so it will go help you with that. All right, so we are going to go to slide number 7. What are some pros and cons?
Sorry, is it time now? Can I ask a question? Should I wait to the end?
Oh, no, go ahead.
Okay. You said they're going to look at your personal line of credit, and you said it needs to be good. What is good? What number is that? What does that look like?
So that's going to fluctuate based on institution. Typically, with businesses, with the current environment with COVID and rates, it does change. So if you look up FICO scores, I have to try to remember these off the top of my head, but typically, here, let me actually pull this so I can tell you how FICO is rating. So a lot of times lenders are going to look around a 720. That's kind of a sweet spot where we like to lend to. Now, of course, if your credit isn't there at a 720, different institutions have different guidelines, and it's not going to be just based on credit. So when you apply for different things, it's a lot that goes into it. But I would recommend, if you do plan on getting a line of credit for your business, I would also work on your personal credit as well. So here, I just pulled up the FICO, the Experian rating, how they consider each credit. So 601 to 660 is considered fair. 661 to 780 is considered good. 781 to 850 is considered excellent. So I have lent to businesses at personal, their score was around a 660 in the past. So I would suggest if you're below that 660 range, maybe talk to your banker or whoever that you work with to kind of help build a plan to get your personal credit up. So that way, when you do apply for your business credit, you are in good standing. Did that answer your question?
It did. Thank you so much.
You're very welcome. So the pros and cons of line of credit. Pros are more flexible based on cash flow needs, especially during seasonal fluctuations or unexpected situations. May build business credit history if managed responsibly. So if you don't manage it responsibly, that will reflect badly on your business credit, which could affect any different loans that you may need in the future. And it can be repaid incrementally. Some cons, it can be riskier depending on the type of business you have. You may be personally liable if your business fails. So a lot of times they will ask for a personal guarantor, which is usually the business owner, saying if the business doesn't do well, you are still responsible for that debt. It may have an adjustable interest rate based on index, which they can depend. So right now, as many of you might know, is interest rates are at a historic low, which has been really exciting to see. But if that were to go up in the future, you may have a higher interest rate. You may have annual fees and require you to provide financial documents every year. So you may have to provide like your profit and loss, your balance sheets, and may have to be fully repaid at some point during that 12-month period. So this is maybe something that you might need temporarily, but feel confident that you can pay back. All right, so I am going to go ahead, I believe, turn it over to Miss Tina. Wait, maybe I have one more, right? Oh, sorry, Tina, just kidding, I have one more here. I had the wrong page pulled up. So let's go ahead, we've got slide number 7 completed. Bear with me, guys. Sorry, lost my spot. All right, so we're going to go over some scenarios on what would be useful when to use a line of credit, or where maybe a different type of credit would be. So, scenario 1: you own a computer parts store and employ 2 part-time employees, 1 full-time manager, and a team of freelance computer repair technicians. There has been an epidemic of people spilling liquids on their computers, so businesses have been great. You have completed several projects and are expecting funds in your account within a week, but it's the end of the month and your employees need to be paid. You don't have enough in your account to pay them. Indicating, what would you guys think would be the best credit that we could use? Would it be a line of credit, a loan, or a business credit card? And I can kind of read that again. So the situation that they're having an issue with is you have completed several projects and are expecting the funds in your account within a week, but it's the end of the month and your employees need to be paid. You don't have enough in your account to pay them. So Based on this, would a line of credit, a loan, or business credit card be the best? Yes, that's right, line of credit. Great job. It allows you to pay it and then have it all to you. All right, the next one, you own a grocery store and one of your vendors is offering a great deal on a line of shampoos. They are suddenly very popular. The only issue, you must order it immediately to get that deal. What would be the best form of credit to use here? Line of credit, term loan, or a credit card? So a credit card, that's a good option as well. But you might want to use a line of credit. So depending on how much of a line on your credit card that you have, maybe you're purchasing, you know, $5,000 or $6,000 worth of the shampoo. A line of credit actually might be the best option in this situation. I'm sorry, Claudia, did you have a question? All right, so I'll go on to scenario number 3. 2 employees will be traveling to a trade show to demonstrate your newest product. They have to book their travel arrangement flights for transportation and food, and will need a daily allowance. What would be the best situation or best form of credit for them to use? Would it be a line of credit, a loan, or a business credit card? So this one would actually be that credit card. This would be easy for using the expenses such as travel and office supply purchases. It can be used instead of a line of credit, and it gives you your employees more flexibility. So if they're traveling around, they can definitely, you can put limits on it a lot of the time. So if your employee is traveling out of state, you can say, hey, you have $100 to use, and you can put that on that credit card for your employee. So I'm going to turn it over to Tina to kind of start over the discussion on some of the other forms. So thank you guys so much.
Thank you, Paige. And we are going to talk a little bit more about the business credit cards right now. If we could flip the screen one, or not the screen, I guess the slide, right? Okay, so I'm sure everyone's familiar with credit cards, but what are some of the characteristics of a business credit card? Lucky for us, the answer is right there on the screen. So they're going to be issued to the business rather than individuals. They're used to make business-related purchases, and they typically have a higher credit limit than the personal credit cards. And then why would you use them? Obviously, we just had the one scenario where it was great. If you are out, you know, you have multiple employees that need gas, you know, it's great to just for them to have their own card to be able to use. It's also a business credit card. It's a great way to separate your personal purchases from your business purchases, you know, and not have to do that everyday tracking on a checking account. Business credit cards are primarily for short-term expenses because even though they may have a higher credit limit, they typically have a higher interest rate as well. We try to educate on this as much as possible whenever you're using a credit card. It's something you want to be able to pay off every month. You don't want to, you know, occasionally you'll have that lingering balance, but you do not want to carry a balance from month to month on the credit card just because it is something where you would be paying interest on. So we're going to look at some of the pros and cons of a business credit card on slide 9. So can anyone tell me some advantages and disadvantages of using a business credit card? And can you think of any that are not on the list? So we'll talk through some of the ones that are already showing on the slide. You can add an authorized user and you can track their expenses. Again, this is great for a company that has multiple employees. You can assign credit limits for employees. So, a lot of times people, yes, Loretta, you're exactly right. Earning points is one of the biggest things too. But say you have, I own a painting company and I have, 5 painters that need to go out and purchase the paint and then also get the gas to drive to the location. I don't necessarily want them having access to a $10,000 credit line. So I can say, all right, of my $10,000 credit line, I want to give each painter $500. So it limits your risk a little bit there too. One of the things that we keep talking about is keeping your personal expenses separate from your business expenses. I will tell you, I worked on a lot of the PPP loans, and this was a challenge for a lot of businesses. They were mixing both, and when it came time to really show their numbers, they had a really hard time doing it. So, Kelly, I know you mentioned you just started your business. I would encourage you from the start to keep everything separate. It sounds like you are on the right track with having that separate account, but just really do a really good job with tracking how you're doing it. Yes, and then the biggest reward that we all love is the actual reward points that you can use for cash back or travel or whatever the case is. I like to save all mine up till Christmas time, and it helps take some of the bite out of that Christmas budget. So that's one of the big things. Now we also have to talk about the cons, right? So again, like we mentioned, giving an employee a credit card that they have access to a set amount of funds. So making sure that we're being responsible and diligent and paying attention to how those cards are being used, because mishandling, it is possible. There is misuse of the credit card. We want to make sure that with business credit cards, it can affect your personal credit report. So making sure that everything's getting paid on time, making sure your utilization is in a good ratio. Those are some of the big things with business credit cards. Typically, if you have a large balance, that can add up very quickly because of the interest. So making sure you're just being diligent with that. Are there any other pros or cons that you don't see listed on the screen, guys? So another part is, making sure you have purchasing power, wherever you're at. That's a great pro to having a credit card and gives you access very easily. It helps you establish the credit worthiness of your business. You said if any fraud, then they don't have access to your cash. That is exactly right. So it's like another layer of security. Essentially, if somebody uses your card fraudulently, it's the bank's money at that point. You do have to do your part to get that recovered, but they don't have access to your actual accounts, which, as a business owner and as a personal, as a consumer, it could affect so many different avenues, if somebody gets a hold to your actual everyday checking account. So absolutely. And it gives you a little bit more flexibility when you're repaying. As far as with credit cards, you don't have a set amount. It's typically like a minimum payment that you're required to do. All right. So if you guys will turn to page 11 in your participant guide, and it's going to say compare my business credit cards. We are going to do that. So deciding on whether to use a business credit card or a line of credit can be tricky. So let's look at some of the scenarios. We're just going to kind of highlight through one or two of these. But if you're at an office supply store over the weekend and you need to stock up on basics such as paper, printer, toner, and pens, what type would you use? Would you use your line of credit, a personal credit card, or your business credit card? Business credit card is correct. Great job. We are going to use that to make purchases. And it's always a good idea. It's going to help protect your personal credit and build your business credit profile. So that is generally going to be the go-to that you would want to go to. All right, I'm sure you can hear me shuffling my papers. I want to make sure that I am not getting out of sorts. Do we have any questions about business credit cards? Okay, perfect. So we are going to move on to term loans on slide 10 there. And this is also on page 13 in your participant guide. So we talked about lines of credit. We've talked about business credit card. One of the biggest difference between those two products and a term loan is it's a fixed amount. With the other two styles, you can borrow and repay, borrow and repay. With a term loan, you're given a fixed amount with a fixed payment. Oh, you said there's not a participant guide? Okay, that's A-okay. So there is a fixed amount with a fixed payment, usually a fixed interest rate. And the term loans are usually a specific purpose. A couple years back, I had somebody that needed to purchase an ambulance. So she needed a term loan. It was kind of cool. It worked a lot just like a car loan. Like if I was going to the dealership and picking out a car, it was very much like that. Typically it's secured with collateral. So collateral is, some type of property or equipment or funds. You get the repayment plan, you know exactly what you're going to pay and when you're supposed to pay it right up front. Typically, like I said, these are used to purchase vehicles or equipment, anything long-term or aside from real estate and software products. You're going to close on, you would use this to close on acquisitions and fund construction projects. So there's a variety of reasons of why you would actually use those. But like I said, a term loan is usually secured. Does anybody have any history with term loans at all? Any business lending? Okay, so we are going to talk through a couple different types of term loans. So you have the real estate secured term loan that is usually allows the borrower to apply and receive funds against collateral related to real estate, such as an office building or land. And it allows the lender to recoup the value of the loan in case the borrower defaults. So a non-real estate secured loan are going to be loans that are secured by properties such as vehicles or equipment. We usually always, not usually always, we always require that the vehicles are covered by an insurance and that the equipment is maintained properly. Because if something would happen and you would default on those loans, we would have access to those vehicles or equipment. And then an unsecured term loan, those typically would have a little bit of a higher interest rate because we are not going to collect anything as collateral. We usually do that based off of your credit worthiness and your income and revenue for the business. So that you're probably going to need to have a higher credit score, expect that the repayment period is going to be shorter termed. So like 3 to 5 years compared to the previous to the real estate one could go up to 30 years. And then the non-real estate secured term usually goes 4 to 10 years. So to typically qualify for a term loan, you usually need to meet the criteria of being operational for 1 to 2 years, be profitable, and have good personal and business credit reports. Seems pretty similar, right? That is exactly what we said for the other two ones. Okay, so now we're going to go to slide 11, and we're going to talk through the pros and cons of term loans. So the pros is going to help finance major expenses and keep cash available for working capital. It's also repaid with fixed monthly payments and allows for easy budgeting and financial management. We are going to use that to purchase equipment, vehicles, or other long-lived assets. And it's used to fund growth for well-established profitable businesses that require permanent working capital. And you're going to get a lump sum at one time. So, usually term loans are a little bit more planned out than a line of credit. We mentioned a line of credit and a credit card is good for like an emergency situation. A term loan is going to be more planned out to give a specific number. The cons, the term loan could have a higher interest rate than a line of credit, just depending on whether it's secured or unsecured. I would say typically if it's secured, it's going to have a lower interest rate than a line of credit, but definitely unsecured, it is going to be quite a bit more. And then the downside to a term loan, once it's paid off, you would have to apply for another one to have additional funds. So it's, again, once it's paid, it's closed and you have to redo another one. So we talked about some of the ways to use a term loan, whether it's purchasing an automobile, or construction projects. We talked through a lot of those already. Does anyone have any questions about term loans? All right, so we are going to decide whether it makes sense to use a term loan, a business credit card, or a line of credit. So you own a high-end industrial fan production company and want to expand from the commercial sector into the residential sector by acquiring a housewares company. You estimate that it will increase your sales by about 22%. The only collateral you have is your equipment and company trucks. All right, so it's going to be a costly and long-term investment. So it's a good idea to use a long-term financing tool with a lower interest rate to finance this project. You can finance the acquisition via a non-real estate secured term loan by offering your equipment and vehicles as collateral. Over time, you can make your money back via profits and sales from the acquisition to repay the loans. So do we understand, and do we have a better understanding of the differences between the unsecured term loan, the real estate secured, and the non-real estate secured term loan? Do we have any questions in between those three? Okay. We've been doing a lot of talking about three different types of credit profiles or credit products. Let's take a moment and just try to consider what your business needs. I know we have Kelly on here who is just getting started. Does anyone else have a business that they want to share? All right. Well, I know a lot of the, common businesses we see, and Paige, you're welcome to chime in on this part too. I know we see a lot of, home health cares. We see a lot of restaurants that are opening up. I love, Kelly, that you're starting a business with a bigger purpose too, with helping people with disabilities be able to interact and engage through FaceTime and Zoom. I think that's awesome. Are there any other types of businesses that you typically see, Paige?
Where I'm located, we see lots of small restaurants, small grocery stores. We see different, we do have a lot of car lots here, landscaping and construction companies, painters, all that good stuff. So lots of different trades we see here.
Awesome. And as far as like the business financing options, I feel like, we do see a variety of them. I feel like I see probably more lines of credit than the other two. And I think that's just kind of a good starting place for a lot of businesses, is just to get that credit established. Does anybody else on the call have any questions about different types of businesses or financing? All right. So we will go to slide 12. And we are going to talk more about the real estate secured loans. All right, so we've talked about this already, but I just want to make sure that we understand it's for purchasing property that will generate its own income. It's usually a higher dollar amount. They could have higher interest rates than a personal real estate loan. And then the repayment terms could be anywhere from 5 to 20 years. So why would you use these? For a non-owner occupied real estate loan, it's going to be to acquire or purchase commercial property that will generate its own income. So non-owner is basically you don't have space in that building for your own business. Those are usually a little harder to lend on. Not everywhere does that. A lot of people are, like Fifth Third, we prefer the owner occupied real estate loan. And by that, we mean that you operate out of more than 51% of the building. So those are used to purchase property or improve land that will be used by the business to conduct operations such as an office or warehouse or retail location. Individuals can collectively form an entity to qualify for a loan. We talked about the interest rates being higher. The down payments may be higher, and then the repayment terms again are from 5 to 20 years. So talking about the types of real estate secured loans, what types of purchases can real estate secured loans be used for? It can be used to acquire or purchase a commercial property. It could be to construct a new building, finance a real estate purchase. So there's several options on how they can be used. So we'll go to slide 13 and we'll talk about the pros and cons of the real estate secured loans. As you see, some of the pros, it's flexible repayment options. As far as terms, you can go up to 20 years. You have the opportunity to finance real estate such as owner occupied properties, finance a leasehold improvements. And then the cons, the down payment is going to be quite a bit higher. There may be additional fees that may raise the total cost of the loan. And there's probably going to be a prepaid penalty, severe penalties, or even lockdowns on early repayments. The interest rates also may be higher than a personal real estate loan just because the risk is a little higher for businesses. So typically to qualify for a real estate secure loan, you must be credit worthy on the personal and business side. You have to be able to show 3 to 5 years of positive growth via financial statements and income tax returns. And then you have to have a debt service coverage ratio of 1.25 or more. And what that does is measures the available cash flow to pay your current debt and can be an indicator of stable cash flow. So I am going to say that I'm an owner of a small freight trucking business. I've rented office space for 5 years and I'm ready to purchase my small office facility. Which form do you think is best, the owner occupied or the non-owner occupied real estate? Well, just because in this case, you are planning, I'm going to plan to use the space to operate the trucking business as an owner occupied real estate. So that loan would be the most appropriate. Just remember, non-owner occupied real estate loans are used to purchase property that will generate its own income, such as like a multifamily residential property. We just reviewed a lot of information on why businesses use credit and the different forms of credit. Again, if you have any questions, we are more than happy to assist you with those, or if you need any further guidance. But there is a wide variety of forms of credit that's available to small business owners, and just continue to return to this information and evaluate any credit needs and develop a strategy to apply for business loans. I think that took care of everything, Loretta.
Okay, awesome. Thank you, Tina. I would like to just remind everyone, all of the participants on the line today, you can receive a copy of this presentation. It is being recorded. And I would like to again thank the Columbus Urban League for allowing us to come onto the call and share this information. So thank you so much. And then I'd like to thank Tina and Paige for sharing their expertise. And I really appreciate that. And if, again, if you have any questions, Tina and Paige, if you could share your information in the chat, that will be helpful to the participants. So if someone needs to reach out and have additional questions regarding the how to use credit, small business loans, they'll have an expert available to them to answer any questions. Okay, and if there are, does anyone else have any questions at all? Okay, so assuming there are no more questions, I will turn it back over to the Columbus Urban League. And again, thank you for allowing us to share this information.
Loretta, thank you so much. Paige and Tina, thank you for the great presentation today. I always have to put a pitch in here for the Urban League and the Minority Business Assistance Center. Just kind of let you know that we do provide technical assistance. We do provide one-on-one counseling, training, obviously like we're doing today. We do have financial readiness services as well. We can help people with contract assistance. We do participate with the state's bonding program, and we also help businesses with their certifications, whether that be a minority business enterprise, the EDGE certification, women in business enterprise, veteran business enterprise. We do assist with the certifications, and come check us out. Again, everything that we have listed here, you can look at our website. You can always email mback@cul.org and check out our Facebook, and also look at our YouTube channels for other classes or presentations that we've had. So again, thank you so much, Fifth Third. Best of luck to all the entrepreneurs. And I guess that's a wrap. So thanks, everybody.